I got the SpaceX short window wrong. I told you this stock keeps drifting down, going into its own lockup. It didn't. It went the other way, and pretty dramatically. And that's what we're going to talk about today, and have an honest conversation about. I pulled together the actual questions people keep asking me about SpaceX and a few other things going on right now. And we're going to go through them one at a time. Let's get into it. Okay, so here's the format. We have 6 cards, 6 actual questions. We go through them one at a time, and every time we answer one, it comes off the board. So remember when I told you SpaceX was going to drop once the unlocks hit? I wasn't out on a limb by myself either.
But you also had the lockup.
Half of the financial press was either saying close to the same thing right up until it happened. Cards 1 and 2 dig right into that. Why I had it wrong, and whether the lockups even do what everybody assumes they do in the first place. Card 3, we're going to show you the difference between a real short squeeze and a normal rally.
There's nothing normal about what you're seeing when it comes to this stock right now.
We're definitely also very positive on the outlook for SpaceX.
Cards 4 and 5, we shift gears a little bit. Whether it's Anthropic actually running the same playbook, and how this AI data center debt ends up sitting up inside your 401k. And the last one, when one guy runs 3 companies.
Okay, I am the chairman and the principal owner of Tesla Motors.
Who actually gets the most attention when there's a conflict? And I'll be honest, digging into this one actually changed my mind. Let's start with the one everyone's made the most comments about. Card 1. Why did SpaceX go up after the unlock? And does it keep going? Fun fact to kick this one off. In the same 6 trading days, SpaceX hit an all-time low, then added back around $500 billion in value. $500 billion is roughly GM, Ford, and Coca-Cola, all 3 combined. That kind of swing in under 2 weeks is exactly why we're starting here. Quick recap for anyone new here. August 4th was Q2 earnings. August 6th, the base 20% slice of the lockup, 911 million shares, hit the market, free to trade, no conditions attached. That is the event that I've been telling you to watch for months. Here's what actually happened. The day before the unlock, August 5th, the stock had its second worst day ever. It was down almost 14%, closed at $108, an all-time low. And then the unlock actually lands the next day. Real supply, real shares hitting the market. And then the stock goes up over 6% the same day. Not down, up. This is an article from CNBC, published that same day. Analyst Greg Martin telling them flat out that the stock's near-term path was going to come down to the lockup lifting. Not the fundamentals, not the strategy. That's the real-time read, published before anybody knew which way this was going to break. And it didn't stop there. Bloomberg's own headlines confirms it. Over the next 5 sessions, the stock climbed back above its own $135 IPO price. And as of right now, it's sitting around $140. So there I am, a few weeks back, telling everyone in my gut said the opposite. That everybody already knows this calendar, so people front run it, sell ahead of it, and the pressure builds into the date. I wasn't the only one saying it either. You just watched the actual headline. That is what happened. What happened instead, enough people were braced for a dump that when it didn't show up at the size everyone feared, that itself became the story. Sellers already sold, stop selling. And here's an article from Benzinga from before any of this even started. SpaceX had about 35% of its entire float sold short. One of the most shorted names in the entire market. When a stock that shorted turns around, some of the move isn't new buyers, it's old shorts running for the door. Does it keep going? I don't know. I'll be honest with you. Structurally, we're still in the same window I laid out originally. This was always the setup phase, not the real flood. There's another slice landing on August 20th, which just passed, and more after that through October. And the actual big one is still Q3 earnings into December. Whether this relief rally holds through all of that, or whether it's a bounce with a lot more supply coming behind it, I don't know. Nobody does. One card, answered. Not with a clean win for my original call, I'll say that. Let's check that. Answered. Card 2. If insiders can dump billions of dollars of stock the second lockups ends, why do lockups even happen? And do they always tank the stock? Why they happen? That part's simple. Early investors, employees, founders, none of them can sell right after an IPO. That's the lockup. It exists so the company isn't flooded with selling on day one, before the market's even figured out what the thing's worth. Eventually, it has to end, because those people own real shares, and at some point, they're allowed to actually sell them. Now, do lockups always crash the stock? This is where some people get it wrong, and I'll admit, I was one of them a few weeks ago. The honest number is about 6 out of 10 go down around the lockup expiring. That's real, it's not nothing, but it also means 4 out of 10 don't. It's a lean, not a law. This isn't just a today thing either. Go back to Facebook's own lockup date in 2012. Everybody expected the same dump. Instead, the stock jumped almost 13% that same day. And that was the start of a rally that doubled Facebook's value over the next year. SpaceX just handed you a live example of the same thing this month in real time. So if somebody tells you a lockup is an automatic sell signal, they're telling you about 60% of the story and skipping the other 40%. That one is also off the board. Card 3. What's actually the difference between a short squeeze and a normal rally? And how do you tell which one you're looking at? A normal rally is new money coming in because people think this thing is worth more. A short squeeze is money leaving. People will bet against the stock getting forced out, buying it back just to close their position, which pushes the price up on top of whatever else is happening. Very different reason, same green candle on top of the chart. You don't have to take my word for what the real squeeze looks like. That's it.
There's nothing normal about what you're seeing when it comes to this stock right now.
As long as the stock fell, short sellers would make money. But the Redditors figured out that if they collectively bought a bunch of GameStop, they could force a surge. The short sellers would have to buy back higher, creating what's known as a squeeze. And it worked.
That's the actual thing, not a chart with an arrow drawn on it.
We're definitely also very positive on the outlook for SpaceX. And I think what is so important here is that if they can get the orbital AI, basically orbital data centers to work, we think this is still a very exciting opportunity.
And that's a Wall Street analyst, same week, laying out actual buy case, numbers and all. Same green candle, more than one real reason feeding it. How do you tell them apart when it's actually happened? You look at short interest. SpaceX had close to 35% of its entire float sold short before mid-July. That's a very big number, and most stocks sit around single digits. When a stock is shorted, starts moving up fast with real volume without some obvious new piece of good news, it's usually your tell. Financial press was already using the word short squeeze about this exact move.
I think it was a huge short squeeze as well. So you had an over 30% short interest in the stock.
Wall Street's own traders are using the same language I just used. So I'm not just trying to be dramatic here. Here's the issue though. It's usually both at once, not one or the other. Some of this move is genuine buyers. Some of it's shorts getting forced out. You almost never get a clean scenario where it's 100% one or the other. Card 3, answered. Next. Card 4. Anthropic's IPO is coming this fall. Does the same buy the lockup dip playbook that just worked on SpaceX actually transfer over to them? Well, I have to say, I'm less sure about this one than the others, and I think you should pump the brakes there too. Here's why. Anthropic isn't the same setup as SpaceX. SpaceX has real reported funding gaps. No positive cash flow projected out for years. This is an article breaking down Morgan Stanley's own numbers on it. $672 billion of SpaceX needs to raise over the next several years, and by their math, the company doesn't even turn positive cash flow until 2035. That might sound dramatic. That's a Wall Street bank's actual math. Anthropic's actual claiming an operating profit already, which is a real difference. It's not a technicality. Here's an article on Anthropic's preliminary numbers. Revenue north of $11.5 billion for the quarter, and an annual positive operating profit. Not someday profit, it's already happened. Anthropic also runs under a long-term benefit trust governance structure, instead of one guy who can move the stock with a sentence on a stage. Different ownership, different math, different risk setting underneath it. What is the same is the playbook. Big pre-IPO valuation run. Hyperscaler money tied into circular deals feeding revenue back and forth. And a real lockup calendar sitting out there once it actually lists. So the mechanism, watch the lockup, don't assume the worst, check what's actually happened instead of everyone afraid of what happened. I think that part does transfer. The specific direction of the trade, up or down, I don't think you just copy paste it from one company to the other. Different balance sheet, different governance, different story. I already told you I got the direction wrong once this month, so take my instinct on this one for what it's worth, which is really not a lot yet. That one's still a little bit open, but it's off the board for today. Card 5. How does debt from building out AI data centers, something you've never bought a single share of, end up sitting up in your 401k? Here's a playbook, and it's simpler than people think once you see it laid out. A lot of this AI build out isn't getting funded with tech companies' own cash sitting on its own balance sheet. It's getting funded through separate lending vehicles, private credit off the company's main books entirely. That debt then gets packaged up and sold to investors looking for yield. And who's looking for yield constantly in huge sizes? Well, insurance companies, pension funds, and the target date retirement funds sitting inside a completely ordinary 401k plan. So you can own zero AI stocks, never even heard of the company running the data centers, and still have a slice of that debt sitting quietly in your retirement account through the bond fund you've never actually looked inside of. Here's the part that actually worries me. Real, big name private credit funds have already started capping how much investors can pull out at once this year. That's already happening right now. while the AI build-out keeps going.
I'm not against private credit. I do think there are issues in it, that will rear themselves one day.
And look at the head of the biggest bank in this country saying about this. Not some guy on YouTube. He's the one using the word crack that's worth paying attention to. Card 5 answered. And honestly, that's the one I'd actually go check on your own 401k for. Card 6, last one. SpaceX, XAI, and Tesla are all run by the same guy. When there's a conflict, who actually gets his attention? I wanted real evidence for this, not just a guess. So I went digging, and it actually changed my mind on this one while I was doing it. Start here.
I am the chairman and the principal owner of Tesla Motors.
There's an old clip going around right now, quoting a bunch of How Musk Spends His Day articles, where he says he spends 80% of his time on SpaceX and something like 2 or 3 days a month on Tesla. Watch it closely and you can date it yourself. He calls Tesla Motors, a name that got dropped in 2017. And he says flat out he doesn't run Tesla day to day, which isn't possible after he became Tesla's CEO in October of 2008. So this is from before that, before the Model S, before SpaceX had even reached orbit. Here's why I'm using it anyways. Not as a current number, not as a pattern. Back then, SpaceX was a new thing. Tesla was already up and running without him day to day, and he poured almost everything into a fresh, new, unproven bet instead. Watch his whole career. And that's basically the move every time. PayPal, then Tesla, and SpaceX, and buying Twitter, turning it into X. Now, XAI. He goes all in on whatever the newest thing is. Which brings me back to the actual evidence. This is Tesla's own proxy filing, documenting and explaining why its board is paying him up to $1 trillion. In his own words, the special committee says Musk himself raised the possibility of prioritizing the other venues if he didn't get what he wanted out of Tesla. That's Tesla's board in an SEC filing, saying he used SpaceX and XAI as leverage in his own pay negotiation. And it's not that hard to see why he could. SpaceX alone is now something like 2/3 of his entire net worth. And it's not just paper. Look at who's actually running things. Bloomberg mapped out exactly who's running XAI now. When it needed rebuilding this year, he didn't go hire AI veterans off the street. He sent in his own people. SpaceX president is now overseeing XAI operations. SpaceX CFO is running its finances. Longtime Starlink executive is XAI's president. And the one big name who did move over from Tesla, the guy who ran Tesla's self-driving software, went there to help build XAI, not the other way around. Now here's the flip side of that argument, the case for Tesla. Tesla's board isn't writing him off. Shareholders already signed off on a package worth up to $1 trillion if he hits some genuinely, absurd targets over the next 10 years. $8.5 trillion market cap, 20 million cars, 1 million robots, 1 million robotaxis. That's Tesla's own board betting crazy amount of money that they can keep him there. So where do I actually land on this? I'll be honest, I came into this thinking SpaceX was the answer. After actually digging into it, I changed my mind. I think XAI is where his attention has gone. Not SpaceX, the rocket company, XAI specifically. Running on SpaceX's own people and SpaceX's own balance sheet. He's done this before. He finds the new shiny thing and he goes all in on it. Right now, the paper trail says the new thing is XAI. That's a gut read too. I don't have a perfect record getting my gut reads, so hey, take it what it is. So I want to hear your opinion in the comments on this. Which is it? SpaceX, Tesla, or XAI? Am I just reading way too much into an org chart in one filing? I'm curious what you think on this one. Well, that's off the board too. All 6 answered. So where does that leave all 6 of these? I hope in a good place to know what to actually watch on these topics. If you want my actual position, here it is. I won't be shorting SpaceX today, yet I'm holding on to some of my short positions that I'm slightly underwater on. This recent move just showed me exactly how hard the stock can turn against anyone betting against it, and I don't need a bigger lesson by doubling. If the setup window plays out the way I originally laid it out, Q3 earnings into December, still where I'd actually be looking seriously on shorting this side. And on Anthropic, I'm doing basically nothing until there's an actual lockup date on the calendar to react to. But I'm likely not to short it unless there's maybe a global meltdown or something. If you want to see more of these 6 questions, one board, real numbers behind each one, let me know in the comments and tell me what you want in the next set of cards. This was much more work than my average video, so I'm hoping you get more value from it too. You can also vote by clicking the subscribe button down below. And lastly, go do some of your own research. Figure out where you stand before you do any type of investing. Don't trust me, just a random guy on YouTube. And as always, good luck, take care, and bye-bye.